finna get your ass the game, man. You know I break it down. Come on, man, you know it's Bain.
Alright. So we back. Hey, check it out. I'm about to drop it on y'all real quick, right? So I know a lot of y'all struggle with understanding breaks of structure, change of character, what's the difference between the two, right? Also market structure, high highs, high lows, lower highs, right? Some of y'all are getting these mixed up, or you're not being able to read it right on the chart, right? Even though you kind of understand the concept, right? You haven't quite gotten it together yet to where you can mark up the chart and you can see the market structure, or you're not too confident that that is the market structure, right? I got just the thing for you guys. All right, it's basically two indicators that will take away the guesswork and do the heavy lifting, so you guys don't have to overthink it, and you'll know exactly what it is just by throwing on those indicators. All right, so right now, guys, we're taking a look at gold versus the pound. All right, and it's simple, right? You guys understand market structure, so you're trying to read it and you go, okay, I think I see market structure here. This is a run, this is a pullback, this is a run, this is a pullback, this seems like a run, right? So maybe there the market was in an uptrend, right? But you're not quite sure, right? You don't really know, like, is this the run and is this the pullback? Is that the run and is that the pullback? Is this the run? Is that, you know what I mean? So you're not looking at it, you know, in the way that you see like a big run and a big pullback, a big run, a big pullback, right? You're not seeing it in that wave. You're not seeing it from a major run and a major pull, a major run, major pull, right? You're reading all the intricate little detail within that move up, right? We can all see the candles, just simply we're going up. You understand what I'm saying? So in the grand scheme of things, that would be a run, right? From like a higher time frame. So on the weekly, you see that it just looks like one straight movement up, right? Versus when you get to the daily, you have, you know, a lot more detail to where it's like, oh man, it's going up, down, up, down, up, down, right? So, you know, this can throw people a lot when they're just trying to figure out what the market structure is, right? They don't really know if they should go with like the bigger runs and pullbacks or just the little runs and pullbacks that they see here, right? So to take away that guesswork, guys, go and get this indicator, right? First hit indicators at the top, all right? And you can just start to type it in, all right? But that indicator is going to be higher high, lower low, live by the lonesome somebody, all right? So if you type it in, just a higher, right? It should come up, right? It's this one by the lonesome, all right? So shout out to whoever this is, right? They made a great indicator in my opinion, all right? So once you click on it, right? You'll, you know, just hit it, right? Boom, hit it, and it'll automatically come over to your TradingView indicators panel, all right? So you expand that, and then here, you know, I have a few listed, but this is the one that will give you your market structure. So basically it's hidden right now. I'm just going to hit this eyeball, right? This is to show everything or hide it in terms of the indicator itself on your chart. The settings are where you go and, you know, change the settings how you want it to look, what you want to show, what you don't want to show. Obviously this removes the indicator itself, and then here you can just see, you know, if you want to put an alert on the indicator, other little things, all right? But the main two that you're, you know, going to be in is either in the settings or whether or not you're going to have it showing or not showing on your chart, all right? So first thing, I'm just going to go ahead and click show, and what you're going to realize, all right, it didn't really pull it up just yet. Let me see on another, there it is, all right, on this time frame. So here what you guys can see is it has plotted, right, the market structure for you, okay? And this is very, very important because again, now you're seeing this big move up is a run, and then the let me show you right here, the line turns red to show you this is the pullback, then it turns green again to show you the run, then it turns red again to show you the pullback, again green to show you the run. So you can see from this run, pullback, we were still in a uptrend, right? We were making higher highs, right? Higher high, but now just here we made a lower high. So that's where you can see that the structure starts to change, right? And this is what this is very good for, right? So without you really knowing how far to go, it's already showing you how far to view the run and how far to view the pullback. Do y'all get what I'm saying to you? Like, it's really going to help tremendously, because when you look at this run, right, you see all of the runs and pullbacks, right? But you don't need to really count that, right? At least on this time frame. You see what I'm saying? If we're just trying to go for structure on this time frame, well, we're now in a downtrend structure. Why is that? Because we had a high, then we had a higher low, but then we made a lower high and a lower low. And once again, we just created a new lower high. So y'all can see that this is down, right? Run, pullback, and peep how they do the colors, right? When it's actually a run going down, it'll be red. When it's actually a pullback going up in a downtrend, it'll be green, and then vice versa. So coming over here, right, you see the runs are green, right? So again, let me point this out. The run up are green on an uptrend. The runs down are red in a downtrend. Okay, so that's how you guys will be able to determine if you're in a uptrend or a downtrend. Guys, this is a really good indicator. Okay, so this is some of the things that it will do for you, right? It's just plot that market structure on and help you read it easily. So here it is on the 4 hour. Let's say I go down to the 2 hour, right? I know all of this is a run up, right? But I'm at a lower high. So chances are price will begin to fall. So, you know, most people will start to look at just this piece of price action, right? To start reading this structure, right? You got some sort of run, a pullback, a run, run, pullback, run. Oh, no, I'm sorry. Pullback, run, right? That's what you got right there. So that may seem like a bit of a downtrend. So let's go to the 2 hour and see what that looks like. Okay. And what it's showing you is that here from this, you had a low, right? A lower high, a higher low, and now a new high. So this is forming as a higher low in the scheme of the structure. So even though we think that it's a downtrend here, it's really just a a higher low that could eventually turn into a higher high, right? So we'll be falling right in alignment with that uptrend structure, right? So when we saw this from the 4 hour, this was a lower high that was created that may have pushed down to make a lower low, but it didn't so far, right? It's starting to turn around at this demand level, at the support level. So you knowing that it shows a higher low, you can now expect a higher high. You get what I'm saying? That's just the way it goes. You're buying low, right? It helps you to not get faked out and just understand what the structure is on the time frame that you're looking at, or you know, how to make sure that you're in alignment with the overall structure from the higher time frame, right? So this is a really good indicator, guys. If you just double click on it, right, and then you can also just hit settings from here and it'll bring it up. Right here are my settings, so you guys can take a screenshot of that. Let me bring it back. All right, so this is what I have for the zigzag, and it's just like how, you know, far this is going to go, right? The source, I put it on the high and the low, not the open and the close, because I want to include the wicks as, you know, the highs or the lows. I mean, you know, as the highest point of the swing. So if I switch this, you guys will see it in the background. So you see how like the line is going all the way at the tip of this wick. So if I change it to open close, you guys will see it just switched. So now it's like more on the body than the wick itself. So I'm gonna switch it one more time so you guys can see. So pay attention to this corner right up here where you see this wick, right there, right? That wick is going to get touched once I switch it to high lows, right? Because it's getting the very highest point that price went to, which is including the wicks. Do you understand what I'm saying? And that's where I want it to show my swings. I don't necessarily want it on the close, even though the close is more accurate, right, of where price actually turned around from. The thing about having it with the wick is that you get to realize that liquidity often sits behind these swings. So if you can see how far price went to with the wick, you can place your stops above that, right? Because the story says it shouldn't get any higher than that, right? It might come to like just try to sweep the money that's sitting behind that high, but it's not really going to go up any further than that, right? It's not going to continue going up, right? It's giving you the signs that it's already being rejected. So if it gets there again, it will probably get rejected again. All right, so that's what that's about. So I like having the wicks instead of just the body of the candle. So when I place my stop loss, I'm going to make sure I get above that wick. That way I can survive the trade. All right, that's how that goes. And then you know, this is everything else that I have. You guys can just copy the numbers right? And that's really it, right? You can tell it what colors you want the lines to be and this and that, right? But none of this really matters in terms of needing to change it. This will just be a preference thing, right? And then what time frames you want it to show it on, right? So I got everything checked because you want to see the market structure on every time frame. That is simply what we call multiple time frame analysis, or multiple time frame confluence, right? They're both the same concepts in a way. It's just that we're looking at a higher time frame and looking at that market structure to go and look at it on a lower time frame and see if we're still in that same market structure that we saw in the higher time frame or not. All right, so again, this is something that's going to level you guys up if you don't understand this already, right? And make sure to check me out, forexwithbain.com, and click on the link to the Discord if you're really trying to learn what this stuff is about, so that you can have a chance. All right, everybody's not making it because they're not trying to learn, they're just trying to get it. It's a difference. All right, the ones who are getting it are the ones who have learned this stuff, right? So again, holler at me if you need to have your hand held or have things broken down and explained, right? I promise you I'll help you understand. All right, so that's what this indicator will do. And again, it's very, very key to have this to take out the guesswork of if you're in a uptrend market structure or downtrend market structure, what phase of the market structure you may be in, right? So if you're in the downtrend market structure, well, this is the pullback phase that you're in, so we can expect the run phase to be next. Do you understand what I'm saying? It takes the guesswork out of things, guys. So get this indicator if you think it'll help, right? And again, I'm not an indicator guy, right? Just to let you guys know, I'm not someone who uses a lot of indicators, but these two indicators are something that I have configured already, right? So if I take this off and I just show you guys over here in TradingView, they have an option for you to hide your indicators, right? So you'll click on this arrow. Again, you can hide your drawings, you can hide your indicators, you can hide your post orders, or you can hide everything, right? I do hide indicators. So since I've already selected this is what it's on last. So if I hit this button, right, it'll make all my indicators go away. Granted, I probably just took them off, but now if I click it like this, they should make my indicators pop up. But since I don't really have them on, right, then they're not showing. So I'm just going to turn on the ones that I have. I do this one, and then the second one I'm going to tell you guys about is the PA Toolkit Lite. All right, and then boom, that indicator is now on. So when you do hide indicators, they go away, so you can have a clean chart very quickly without having to have a bunch of markups on or a bunch of indicators on. And then when you want to turn them on, instead of having to go to each one again and click it on and go and click it on, right, you just click this button and then voila, they pop up instantly, right? So it's an easy way to go from a clean chart to a marked up chart, right? So you don't have to do the marking up, right? A lot of us will put the change of character, we'll put the breaker structure, right? We'll put the trend line, we'll put the market structure. Do you understand what I'm saying? These are the two main staples of what you need in order to succeed, right? Knowing what the structure is, and then being able to identify, when the structure is changed, which is what the breaker structure and the change of character helps you to understand, right? So think about it. You have the market structure already laid out for you, and then you also have when structure has changed laid out for you. So you can know when you're moving from a uptrend potentially to a downtrend, and vice versa. When you're moving from a downtrend to potentially a uptrend, guys, these two indicators will do the battle for you. Okay, you just have to know how to read it, and from there it's good to go. I mean, order blocks and all, guys, right? You understand what I'm saying? So that's a quick way of how I get these indicators on, right? By just hiding them or showing them when I need to see what's what, right? If I can't make out this structure, if I don't really know what kind of trend it's in, I pop this on and then I just read, right? So here's my high, higher low. We made a lower high, so clearly we're not up, right? That goes to show you that right there. Then we make a new low, breaking that previous high low, so you can already see we're going down, right? And then now all of this big old push up, right, was just a pullback to the downtrend market structure that we see. So if we have a lower high here, then if we continue market structure, we should go and make a lower low. So you can already expect gold versus the pound to start going down. And how do you know that? Because you just had a change of character here. So it's telling you that prices change from a uptrend to now a downtrend or potential downtrend. And it just made a lower high right here. So if I go on a lower time frame, okay. All right, let me see. All right, but higher low, but it's going to go a little, more than I can explain it now. I was looking for it to paint this as a lower high so that you guys can see that, but it's still seeing it as a higher low. So that pullback, that uptrend is still potentially going to go up, is what that's saying, right? And which it just makes sense, because even when we're on the 4-hour time frame, we had the change of character where price just broke. But anytime price breaks a low, right, and makes a new low, it's going to go pull back to this supply level before it begins, or this supply level before it begins to drop again, guys. So yes, we're getting buying opportunity on pound versus gold, or gold versus pound. And here, when you get to that lower time frame, you can start to see that it's tapping into some sort of demand level nearby. It's giving you a pin bar, right? So now may be a very good time to buy it and expecting it to get back up to this level of supply, and then turning around and selling it from there, guys. This indicator is just really telling you everything that you need to know. And I use other indicators, but like, if I can only choose, leave with two, right, or something like that, it'll be these two, right? Because this is the bread and butter, the meat and potatoes of what you guys need to understand in the market in order to be able to make money, right? There's a cycle to the market, and it runs off of how you see the market structure, right? And how you can read if you're in an uptrend or a downtrend. Guys, if you can't tell that confidently, you're not going to be good at trading anything. I don't care what market it is, right? You're not going to get it. Okay. And then also, once you understand the market structure, do you understand the concept of what happens when a high gets broken or when a low gets broken, right? What happens after that? So I'll tell you real quick. You break a high, right? You pull up, you make a new high, you pull back, right, to make that higher low, and then you run up to make the higher high, right? But that pullback goes to key areas, right? That pullback is depending on, how far it'll pull back. Fibonacci can tell you that sometimes, right? But then also key points in the push up that made price break this high tells you a lot as well, right? So we're looking for those key areas for price when it first breaks a high to pull back to, before we start to look for, our entries to go back in the direction of the uptrend, right? So these concepts, guys, are the things that you need to understand, right? First is the market structure, and the change of character, the break of structure. That's the next level underneath, right? And then from there, it's knowing the cycle, the concept of what happened when it breaks the high or breaks the low. What do you need to look for? What should happen? When is it ready? Right? That's the keys, guys. I'm giving it to y'all, but if y'all want more in detail, come holler at me. All right. So again, just to review this last one, right? PA Toolkit Lite. Hit settings, and I'll go to input. Here's what I got going on, right? So I don't have market structure showing because I'm using the higher high, lower low to show my market structure. I prefer that one, right? Liquidity settings, right? I'm showing the liquidity sweeps, and that's these little dotted lines. It shows you, hey, it's swept liquidity, right? It's also these green lines for the liquidity that sits below, right, as support levels or at swing points, right? So again, people who bought from here, their stop losses are sitting behind here, or possibly sell stop orders, right, where they expect price to go down after it breaks. Money is sitting there. So when we're sweeping liquidity, we're going to these areas to sweep them before we make our initial move. All right, so that's why I got the liquidity settings on to show me when the sweeps happen, so I know that it's time to go in the opposite direction. Okay. The order blocks, again, you can see I got just one order block here, right, and one order block here. All right, so the supply order block, this is the demand order block. If price gets here, we expect it to bounce from here and rise up. It's that simple. If price is getting up to a sell order block, all right, we can't see one on here, but if it comes up to a sell order block, then, or like from here it goes up to the sell order block, we expect it to fall from that sell order block. That's what that's all about. All right, and then I don't have this showing, and the colors or whatever you want the colors to be. But guys, these are two Very, very simple indicators. All right. PA Toolkit by UAlgo. All right. Shout out to you, whoever you are, wherever you are. And, you know, thank you for creating these indicators. All right. You guys are awesome. Again, guys, get that on, you know, set them, you know, turn them on just by hitting the view. Boom, hit the eye. That'll turn them on. And then now you can control them by hiding them or unhiding them with, you know, this little feature or setting here on TradingView. All right. I promise you guys, you get these in your life and you learn how to read the market structure and how to read the change of characters or the break of structure, knowing what the concept is when that cycle begins of breaking highs or breaking lows, what's supposed to happen, waiting for it to happen, and then waiting for your confirmations. Guys, y'all will see, you know, a huge change. Right? You'll finally feel like you can get this, right? You're going to feel like you can make it now. You're going to finally feel like, holy shit, this is the holy grail. This is what I've been looking for the whole time. Nobody's been able to explain it to me, but damn, Bain, thank you. Thank you, man. You got me where I want to be. All right. Cool. You know what I'm saying? It's exactly what I wanted to happen. All right. So again, guys, there you have it. The only two indicators that you'll need in the Forex market. You heard it from your boy. All right. Peace.
Wanna get money? Wanna get paid? That's Forex. Like a sensei, then you know you gotta come and swing my way. And if you wanna fast forward, hit replay.